If this is the way you're approaching trading, it's the fastest way to run into a wall and go bankrupt. If it moves, we can make money, but if it doesn't move, we're not gonna make a penny. How do you merge speed with efficiency, but at the same time doing it just right? So what we're going to be dealing with today is we're going to be talking about how to do day trading specifically with support and resistance. And more importantly, I have a trade that I'm currently in for CAD yen, or I want to show you how I'm actually doing that trade right now live. So let's get straight into the charts, and I want to show you step by step on how all of this stuff is done. Now, one of the main important pieces that I want you guys to understand is when dealing with the charts, it's very important to get the fundamentals right in your mind. Number one, when I do a trade, that trade must perform, it must give me 10,000% returns. And I want to do this all day, every day with zero losses. Okay. Which means if I put in $100, I need to make $40,000 out of it. And then the next trade I do, it needs to do the same or more. If this is the way you're approaching trading, it's the fastest way to run into a wall, okay, and go bankrupt. Now, even though I'm talking about this as a myth, can this be done? And the answer is yes. Now, how? What do you think the larger players are doing? Are they doing the same thing like every other larger player, saying, I'm going to make 12% ROI per year. I'm going to put my money in a fixed deposit. I'm going to do mutual funds. I'm going to invest in the index, and I'm going to sit back and I'm going to let the money take care of itself? No. You're going to be highly mistaken if you think the larger players are going at this slow turtle dying pace. They also go for the big bucks, but there is a way to go for it. One of the things you need to internalize is you got to have a good win rate, and you need to learn the power of compounding. So if in a single trade, if you're able to generate 3%, 4%, now that number seems like very small, especially if you're trading $100, you're like, what am I going to do with $3? You know, it's that number that's causing you issues, because you want to turn that 100 into $5 billion, and not tomorrow. You want to do that now, right? Now, how do you merge speed with efficiency, but at the same time doing it just right? You want to compound. You need to have a system. The way you trade has a high level of win percentage, or you know exactly, ooh, this is a good trade. I need to put more money on it. Now, here we have CAD yen on the weekly chart. Now, first things first, you want to look at it as this thing on the right side. There's a price here at 118. This thing was going up. I want you guys to understand the price was at 118, and then the price dropped dramatically to 102. I just want you to comprehend one thing. Did the price drop on the daily chart, the 4-hour chart, the 1-hour chart? Yes, it dropped in all of them. So what does it matter what is happening? You need to internalize that. And then you have your weapon of saying, got it. Now that I got it, watch me go in and out of this market and go click, enter, profit, next. No, wait, enter, profit, next. I'm going to show you that technique now.
Now, are you curious about the exact strategy Navin has been using to approach the markets? The Mastering Price Action course reveals all of that. In that course, you're going to understand the logic behind each price action movement. And from that, you will be able to take your trading to the next level by having a much more solid understanding of the markets. And because you're a subscriber, just click on the link in the description below to access our exclusive discount. Time to take your trading to the next level. All right, let's get back to the video.
So first things first, here we go. Prices drop dramatically. First, understand, why does price drop or rise? Now, the very first thing to understand that in a very quick way is prices should not. This is the normal market. They do not like price to move. You and I, as traders, we love price to move. If it moves, we can make money. But if it doesn't move, we're not going to make a penny. Now, understand one thing. If what the market is two people doing business, okay? Let's assume you are this guy on the left and you own a restaurant that serves breakfast. And the guy on the right is a store that sells eggs. What that means is you as a restaurant, do you want the price of your eggs to fluctuate on a day-to-day basis where a customer comes in and you're like, wait, hold on, let me check the market. I'm sorry, the egg that was $2 now is $7. Your customers are going to be irritated, right? The market is no different. They hate price to move. So why does it move? So a couple of things. When there's a shortage or a high demand, when there's a shortage, let's say eggs, there's a shortage of eggs. There was 10 eggs that was selling and there was a buyer who wants 10 eggs. That is equal. I want 10. You have 10. We are happy. Thank you very much. Transaction complete. Did the price move? Absolutely not. This word, what you need to register is called a fill. Now, I want you to understand one thing. In the past, there was issues to be filled. So a lot of people who are above 50, they understand the concept of, I want to go buy an item, I don't get it. What we live in right now is the age of abundance. We don't know what it means to be not filled. Not filled comes in when the supply, the people who are selling it say, I have 1,000, and the people who want it says, I want 8 million. There's a shortage. So what do the people who want it do? Whatever the price is, I don't care what the price is. I'll give you more. The next guy will come. I don't care about what that guy said. I will give you this price. Do you understand why the price moves? The price does not move because a trend line was broken. Now, when you look at this, is there too much or too less? You tell me. Too much. Because there's too much, they're giving a discount, right? Now, where you need to get how much discount? And how fast. These are your golden things that you have to remember. That tells you how much demand there is for that particular product. Now, I'm going to give you a scenario. Why does the design look like that in terms of technical analysis? You want shoes. Let's just call it Jordans for the sake of simplicity. Nike Jordans, okay? You're just going to listen. I'm not going to draw it. You're going to listen. This is going to happen in the next 5 minutes. You are just listening and you're like, I don't care how it looks. I want to feel the rhythm. It's 100. It's 100. It's 150 cents. It's 100. It's 100. It's $102. It's $102.50. It's $103.50. It's $112. It's $175. It's $300. $310. Without looking at the chart, what did you understand? What just happened? And how quickly did that price change? What is going on? High demand, price went up. So how was it in the initial stage? In the initial stage, it was slow. And then it went, whoa, what just happened? Keep that in mind. I'm going to take you to the charts now. So what we just did is the price was hovering around 100. It was hovering around. Then it went to 102. And then it started to do this. Okay, so that's how it looks. Do you know why people draw support and resistance? And they say, you see this cluster here? You want to draw a line on top of that cluster because now resistance will become support. Now, if I draw a line like this at 102 and you ask me, Navin, is it 102 or 102.50? Exactly tell me how to draw it. And I say, it doesn't matter. It's hereabouts. It's hereabouts. Isn't that going to drive you crazy? Hereabouts. I need to know exactly where to draw the line, Navin. Don't tell me hereabouts. Why did Navin say hereabouts? If I do this again and you're with me and you're like, okay, price is at $300. Price is coming down. $275, $250, $230, $200, $180, $170, $150, $140, $130. $125. Now, what is going on in your mind around that price? Last time it went crazy. I think it's going to go crazy again around this time. This is why support equals resistance or resistance equals support. It is that and that logic only. It is not a line. Now, if prices are dropping dramatically, okay, what I do is I look for these type of levels where I see, there used to be a memory here. Why memory? Because I look at how does it leave that memory area and how does it respond from that memory area. And that tells me that same memory goes berserk. So now I want to understand if that memory price is now gone, well, what do I do now? Because I'm not going to trade on a weekly chart and wait 5-6 years for a trade to set up. I'm like you. What can I do today? What can I do at least tomorrow or day after tomorrow? But I'd like to know what is there for me to do. So first things first is observe and see where is the flow. So what's the flow here? This aggressive sellers are happening. That's the flow. They're trying to get rid of this thing. Sell, 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 sell. Those of you guys who are a bit on the fundamental side, you guys know why this happened when the Japanese yen bank intervened. But let's say you don't know what that is, and it doesn't matter. What you do notice as a simple trader, let's put it that way, is, wow, that's crazy. Good. Next, what do we know about that information? As the prices start leaning up, and trickles to that area, what we are now interested in is, if someone is buying, I want you to understand the demand of the buy. So the overall flow is they want to get rid of it. Okay, this basically means get rid of this item. What is this item? This item is this thing. So they're saying get rid of that. I'm not going to call it CAD yen. I'm going to say that. They're trying to get rid of that because this could be Forex futures, whatever you trade. They're trying to get rid of that. Now, in this area, as people are buying, tell me the speed of the buys. Are they aggressive or are they slow? Tell me. They're strong, right? They start off here like they go from this price to this price, full speed. Whoa. My goodness, if they're buying that aggressively, get out of the way. Let them buy. For us, we know we want to get rid of it. If we want to get rid of it, we want to make sure we can get the best price possible so we can give it to this fella and saying, give me the difference so I can make some money. We want to give it to that guy. Remember, how do you make money in a sell? You take whatever you can and then you offload it lower. That's how we make money in a sell. Just like in a buy, you take it for whatever lower price and you offload it at a higher price. Remember, what the product is, nobody cares. Okay, you shouldn't either. Now, so far so good. The prices are getting aggressive and even more aggressive. So when you're going even more aggressive, this SNR, the lower one, you must ignore because they're telling you they want to buy this super aggressively, which means any deal that comes in for a discount, they will buy it. So if you are saying, I'm on the player side for getting rid of this thing, I want to do it for the right timing, okay? Because for you as a trader, don't you like it if you enter, the trade goes in your way? Isn't that better for you? Okay, so I want to show you my trade. So I'm in this trade for CAD yen. I'm going to open this up. As you will see here, I'm in this for 20 standard lots. My average position size is 107.41. My currently running P&L is $2,250. So I've traded a much smaller size on this because my risk is a little bit bigger on this. But when you get confident in this, these numbers go up to 2,000 standard lots. Now, let's now go back to this thing. If I'm trading today, what should I do? Well, I got these minuscule things, right? So let me show you how prices went up to that area. Ready? Let's take a look at how it goes up on a daily. On a daily, it goes up, down, up, up, up. Look how slow that is. And when it went down, look how low it came. So it's getting choppy, turbulent, everything. So I'm looking at this area, which happens to coincide with multiple areas. So we would say, he's coming up, but he's not coming up as a green bar like this. One green bar. He's coming up, big green candle, medium green candle, another green candle. I'd like to investigate this. I'd like to find out what's up with these green candles. I'm going down to see the details of this. Now, that same line, I see this as, oh, don't touch it. They're still hot. What's going on? Are they hot? They're doing that thing again. $300. $325, $350. So should I guess and say, I think it's a sell now because this is a doji, a hammer, a pin bar, a gravestone, a graveyard, a raccoon, a Chewbacca. No, why do you want to guess? Why do you want to label it stuff? Feel it, right? Don't guess because they will come back and saying what you were guessing is now here. It's a lot more comfortable when they tell you what you are thinking is correct, isn't it? This is telling us the markets are moving in our favor. This is now, I'm going to say, I know they want to get rid of this thing. I'm going to get this item for this price. And then I'm going to offload it here because I know this guy is desperate to sell. And I'm going to make this difference. I'm going to make that difference in the money. And that's my income. Why? Because I don't need this. I'm not going to take this and put it in my locker. I don't need it. So if you have a large order you better make sure someone else can take it off of you. This is again, an advanced future problem. You don't need to worry about that right now. First things first, is it a game on a time frame? If you said no, and you're saying it's a price game, fantastic. Let's go back to the charts. What do I see in the recent markets that's gone crazy? So from the big picture from October, it's been crazy down, paused a little bit, crazy down. What does crazy down mean? They're trying to get rid of it, right? You're like, okay, let me help you get rid of this nastiness. So you are now looking at this and saying, all right, they want to get rid of it. Obviously, you don't want to do business down here because you're not going to make any money. You're like, come on, give me a deal. So how do we find some buyers? You wait, let them come. Sorry, I'm going to show you how to do that. Here's the daily. Buyers are coming up. Whoop. Buyers pause. Buyers are coming up. We are at an SNR. How's the speed? Fast or slow? It's too fast. They want to buy it. When they want to buy it, I want you to think in a dual fashion. I'm at SNR. I should sell at SNR because I will make money. This is the FOMO side, which is good. FOMO is what keeps you making money, right? You don't get old at least. Okay. Now the other side says, wait, the buyer is too hot. If the buyer is hot, maybe you'll get a better deal, which means more money. So it's in our favor both ways. So at this point, we're saying we're at SNR. I don't want it. And then we see this collapse come in. We're like, no, that doesn't seem right because he was really aggressive. He wanted to buy so badly. What's with the discount? When you see something like that, you should also be like, that doesn't make any sense. What's going on in the markets? It doesn't mean take action or chase it. It just means wait. You need more information to process this thing. Something doesn't fit in this scenario. Then the buyer comes again. Is he hot? Is the buyer hot again? Absolutely. He's hot again. But what is different this time? He's failing to make a higher high. This is his next attempt. When he went the first time, he got a massive discount when we were like, what is going on? Is he out of his mind? Why is my store giving such a big discount? My store is woohoo, right? I don't understand that. Then the buyer goes back up, but he doesn't buy. What I mean by, when I say he doesn't buy, he doesn't make a new high. That makes me wonder. And when that fails, now I can say, oh, that anaconda, that raccoon, that exhaustion candle, that pin bar. I can open up the textbooks and go down the dictionary and say, oh, this vocabulary fits that. And suddenly it works. You see this candle right here? This green one? I'm going to put a circle around it. I want you to focus on this green candle. This is circle number 1. And I'm going to put a circle around this second area, and I'm going to call this number 2. Look very carefully. I'm going to open it on the 4 hours, one time frame below, the DNA. Look at the speed on the DNA. Is it fast? Oh yeah, baby. That's fast. It's like a rocket. It looks like Elon Musk's rocket ready to launch. Right? Look at the next one. Does that look as smooth as the previous one? Or is it broken, choppy, broken? That is my giveaway. Now, after I see that, a slowdown in the market, I then don't do anything even when I see that anaconda, raccoon, pin bar, exhaustion candle, whatever you want to call it from your vocabulary. What I'm interested in is, whoa, welcome back, my friend. I've been waiting. Okay, once that comes in, I want to see a test after that says, I cannot go up. I die. When that happens, me good. I am ready to extract cash and saying, I need to sell this now. Time is of the essence. I need to sell. Did it make sense? I want you to walk away with some actionable material that you can actually use and improve upon, right? Because it's only then will our relationship tighten. It's only then will our trust tighten. And it's only then will we both prosper. So again, with this knowledge that you have now, promise me you will stand up and level the playing field and you will stop wasting time doing nonsense with, I'm going to draw this design, I'm going to draw that design, because the whole purpose of you doing all that stuff is because you want to make money. I get it. But now that you know how money is made, I leave it to you. to make the right decision, to make sure you do it the right way. Once again, thank you all for coming, guys. My name is Navin Prithyani, signing out. Thanks a lot. Until next time. Bye for now.